morning, and thank you for tuning in to part 3 of our Homeownership in America, Prioritizing Attainability in 2021 event series. My name is Josh Resnik, and I'm CQ Roll Call's publisher, as well as Chief Content Officer for our parent company, Fiscal Note. Before we begin, I'd like to take a moment to thank our sponsor, the Manufactured Housing Institute, for making this event series possible. I'm joined today by their CEO, Leslie Gooch.
Thank you, Josh, and welcome back everyone to part 3 of our virtual series about attainable homeownership in America. As Josh mentioned, I'm Leslie Gooch, the CEO of the Manufactured Housing Institute. MHI is the only national trade association that represents all segments of the factory-built housing industry. Our members include home builders, suppliers, retail sellers, lenders, installers, community owners and operators, and others who serve the industry. We also have 48 affiliated state organizations. During the first 2 parts of our series, you heard from Representatives Steve Stivers and Kathleen Rice about how the federal government is looking at ways to reduce barriers to attainable homeownership. In part 3, we have a panel of experts joining us to discuss the challenges in the market for the availability of attainable homeownership and how policymakers can contribute to solutions to these challenges. As the nation continues to navigate a wide-scale housing shortage, the demand for increasing the attainable housing supply in this country has never been greater. However, barriers to increasing this supply is exacerbated by the worldwide pandemic and include rising construction costs, supply chain challenges, and labor shortages. Manufactured housing is the main source of unsubsidized affordable housing in the United States. It is a critical homeownership option, and it is commonly more affordable than rental housing and currently serves 22 million people. Manufactured housing offers value to consumers because of technological advancements and cost savings that are associated with the factory-built process, and because of the efficiencies that come with a federal building code. Solutions to ensure that manufactured housing can contribute to an increased supply of attainable homeownership include ensuring the housing finance system serves consumers seeking to purchase manufactured homes, supporting updates to the federal building code for manufactured housing to ensure the homes can continue to provide the innovative features that consumers are seeking, and ensuring manufactured housing is included in federal efforts that seek to eliminate exclusionary land use policies and regulatory barriers in communities. Across the country, there are countless examples of state and local zoning, planning, and development restrictions that either severely limit or outright prohibit the placement of a manufactured home. As we continue to address the shortage of housing in the country, I want to thank our panelists today for sharing their insights into the barriers that are limiting attainable homeownership and their suggestions for solutions to these problems. Thank you.
Thank you, Leslie. Kicking off part 3 of our series, we're joined by Dr. Jessica Lautz, Steve O'Connor, and Mark Yost for a panel discussion. Good morning, Jessica, Steve, and Mark. We're thrilled you could join us today for this important discussion. Let's dive in. I'll start with a question for all the panelists. This has been quite a year for the housing market. Can you each tell us what are the biggest surprises or challenges that you've seen?
First of all, it's hard to top the surprise of a global pandemic that disrupts the entire economy. But in the housing market, I think I was a little surprised. We were surprised by how robust the market activity continued to be. The home buying market really didn't cool off that much. And, that creates other challenges with the tight inventory. I know we're going to talk about that. In terms of challenges, I think they're twofold. One, there was a hard pivot for the industry to the virtual world. We had to do business online, remote online notarizations, verification of income, employment, all the different things that we normally do through normal business channels we had to do virtually. And then also just the challenges of the impact on the LMI community, communities of color. I mean, they were already in dire straits before the pandemic. The pandemic exacerbated that, and that's going to be an ongoing challenge as we try to ensure an equitable recovery.
And Josh, I would say the speed of the market, the speed of the housing demand once the stimulus started and with the low interest rates was a key surprise, I think, for everyone. When the pandemic first hit, many of the building supply chain, much of the building supply chain idled or pulled back its capacity, including lumber mills and others. And so as housing demand ramped up so quickly, the supply chain was caught. And I think we're seeing that today with housing pricing and inflationary pressures due to lumber and other commodities in the housing trades.
Thank you. And Jessica, for you in particular, what would you say has been the impact of the COVID-19 pandemic on the housing market?
Well, it's completely upended it, right? So we knew in the beginning of the year, a year ago, that things would get difficult, and they did. I will say that realtors very quickly transitioned their business to make sure that consumers were safe and that they could continue real estate activity. And what happened very quickly is that consumers wanted a new place to live. They were tired of living in their place. They suddenly felt the walls closing in and they needed a bigger place, or they just needed less density and they needed the fresh air around them. And with the flexibility of workplaces, they jumped in the market. I will say, though, Steve is absolutely right. We are not seeing an equal playing field right now. We're not seeing an equal recovery. I know we'll touch on this later, but the K-shaped recovery is real. We are seeing a lot of Americans suffer and having a hard time paying their mortgages and their bills. It's good that there are safety nets out there right now.
And Jessica, also, we're seeing homeowners leaving cities and moving to the suburbs as a result of the pandemic. Do you think this will be a continuing trend moving forward? And what other trends are you seeing as a result of the pandemic?
So I think that if this is here to stay is really up to CEOs. At the end of the day, if you're going to require folks to come back into the office, then it's not necessarily going to be something here to stay. If you have flexibility as an employee and you don't have to go in 5 days a week, 9 to 5, and punch that clock, then I think there's going to be a lot of people who are going to take advantage of having less density around them, being in the outer suburbs, being in a small town or a rural area that applies for affordability, that they suddenly can buy more home, but also just more room for their family. And perhaps that's a different type of family living in that house, whether that's a multi-generational home or roommates living there. It just allows them more flexibility. But a lot of that is going to be up to workplaces moving forward.
And Jessica, one more question for you, and then we'll go back to the full panel. Can you share with us some trends you're seeing in the housing market for both home buyers and sellers, both pre and post-COVID?
Yeah. So one of the biggest things I think is really shocking this year is the growth in multi-generational homes. So people are really supporting a lot of people in that household. 1 in 6 home buyers are actually purchasing multi-generational homes during COVID. A lot of that is for protection for older adult relatives, taking them out of nursing homes where they were living independently, and there's just loneliness around that. So that has been a big growth. There's not the housing stock to support that living, though. We know that the housing stock doesn't support older adults, and we know that aging in place is not something that the housing stock necessarily is able to do right now. But that is a massive trend that we saw. For home sellers, they just need more space, or they want to be close to friends or family. So those are big, big drivers right now in the housing market.
And as I said, we'll go back to the full panel now. Already in the throes of a wide-scale housing crisis, barriers to homeownership have been exacerbated by rising construction costs, labor shortages, growing student debt, and a global pandemic. Can you each share with us what you think are the main barriers to attainable homeownership?
Sure, Josh. I think the main barriers are really twofold. It's primarily zoning and regulatory barriers, and the second really is innovation. When we look at the cost of affordable and attainable housing and some of the things that Jessica just mentioned in terms of multi-generational, we're seeing a lot of ADU business and other things that are succeeding because of those regulatory barrier reliefs. But we're also seeing a lot of cost added to a home because of regulatory barriers. And then also on the innovation side, I think it takes all of us in the industry to figure out what innovation we can do, not only traditional home building, but on the financing and other side to bring people into the industry and to get people into an affordable, safe home.
Yeah, I mean, I would add the number one barrier, I think, is the lack of inventory. There's a severe supply shortage. We're at least 3 million units short where we need to be in terms of available housing units. And when you look at housing affordability, the inventory issue is even more acute. So we need to increase supply, and we're barely keeping pace with household formation. You really need to stay ahead of household formation to account for the loss of inventory as it becomes obsolete. So supply is the number one challenge, I think, across the board. And then second, down payment. I mean, that continues to be the number one barrier on the credit qualifying side for first-time home buyers. And there are, fortunately, a lot of down payment assistance programs out there, but people aren't unaware of them and aren't familiar enough to how to access them. And so that's going to be another challenge as we try to reach more first-time home buyers, is increasing the efficacy and awareness around down payment assistance.
Yeah, I would echo Steve there. The inventory crisis is a real crisis, and it is pushing affordability and homeownership very out of reach for young adults who want to enter the housing market, for first-time home buyers, for minority buyers. This has become a very big issue in the country. What also I think does hamper saving for that down payment, though, and what we've continually seen in surveys, is student loan debt. It is really the number one barrier, and it even outpaces high rental costs, because a lot of young adults move home and they can try and pay off that student loan debt, get their debt to income ratio in check. That is available for a lot of young adults. But that student loan debt, you can't refinance it. And the interest rates, aside from 2020, have been very high for student loan debt. And there's a lot of loans that a young adult could take on. And so it becomes very hard to pay down that debt and keep track of it.
And Josh, I would just add to what Jessica and Steve said. I think, the supply chain shortages that we've seen and the supply of an inventory of homes, we have solutions right now today in the country that can ramp up supply and demand. If you look at McKinsey study after McKinsey study and just what our own experience is, we can build homes 50% faster in manufacturing than a traditional home builder. So we can ramp up the supply 2x faster than traditional home building can. And I think to exasperate the financing aspects, there's tremendous number of renters in the country. Roughly 1/3 of the households, just under 1/3 of the households in the country are renters. But you look at things like only 1% of credit scores take into account rent payments when they evaluate credit scores overall. And that's really a disadvantage to that 1/3 of the country who pays a majority of their income in rent.
So Mark, you raise a good point. And as we know, there's a labor shortage and supply shortage currently in the housing market. As a home builder in particular, can you tell us how that's impacting the creation of affordable home ownership across the country?
Yes, so the supply chain shortages, primarily in lumber and other materials, have recently raised the price of a home, a newly built home, by $20,000 to $25,000, making it almost unattainable for most Americans. At the same time, the labor shortages have been ongoing for not only traditional building trades, but a majority of trades in the country. So we've seen the cost of labor go up, and that really impacts home building even more so than other industries, because we have a subcontracting cost plus trade in the traditional channels of home building. So the first subcontractor adds, their cost of labor and then marks it up, and the second one does and marks it up. And what that does, it creates a compounding effect on the cost of housing and labor. Not to mention about 10 to 15% of the cost of housing in the country is rework cost because of labor inefficiencies or unskilled or untrained labor. So it tremendously adds to the cost of homes. So as we solve labor and as we solve, the traditional challenges with innovation, I think we can solve both of those and make it more affordable.
And Jessica, millennials who make up the bulk of first-time home buyers face a lot of headwinds when it comes to purchasing a home, most notably high student loan debt. Do you see that changing anytime soon?
Yeah, I don't. There could be some relief for student loan debt that could be coming down the pipeline. But the problem is student loan debt is a massive amount of money, and it is the number one barrier, like I said. The other thing about millennials that I have to say, though, is that there's a lot of talk about millennials not being in the housing market or eating avocado toast and all the tropes about them. I have to say, though, they're the largest generation of home buyers since 2013, and they have been a force in the market because they range in age from 22 to 40. And a 40-year-old may be well on to their second home by now. But their homeownership rate overall for young adults is lower than past generations. And that is something that we are seeing consistently. I would love for there to be relief for student loan debt, but I don't think that there's a silver bullet that really does help all of the borrowers that are out there.
Steve, are lending criteria for borrowers tightening or loosening? What's leading to the trends?
Yeah, Josh, I think they're definitely tighter. You look at the median credit score in the fourth quarter of 2020 was around 786. A year earlier at the same time it had been 770. So you see this migration toward higher credit quality borrowers, in part because of the concerns around forbearance, right? Loans that would go into forbearance, you have to deliver those into Freddie, Fannie, or FHA, and there are additional costs and level price adjustments when you sell those loans to Freddie and Fannie. So lenders are putting overlays in place to avoid those additional costs. With FHA, there are indemnification risks. So it's a more protective posture by lenders in terms of underwriting. I mean, credit's readily available at the higher end of the market, less so at the lower end. And the silver lining, the paradox, is that as rates go up, credit should loosen some because you're going to be competing for a purchase market and first-time home buyers. So you're going to have to be a little more flexible, a little more innovative. But it's definitely tighter right now.
And Steve, with home prices skyrocketing, any rise in interest rates knocks even more potential buyers out of the running. Yet somehow the housing market is more competitive than ever. What factors are contributing to this?
I think Jessica nailed it earlier. I mean, it's mobility, people wanting to escape density, to have different places to live, which they could do in a virtual environment, wanting to have a second home so they can escape the city. So that's increased activity, and rates were low. But, at some point that has to end. But I think Jessica's explanation earlier was perfect.
And back to the full panel again. The lack of affordable housing and lack of housing supply seem to be two of the biggest issues facing prospective homebuyers. What are some solutions you see to help this problem? Jessica?
Great. First up here, I mean, there's a lot of solutions I think that are being discussed. Certainly looking at density restrictions, allow for ADUs, especially as we look at the growth in multi-generational home buying. I would give a hint to the CEOs, allow flexibility, because we have seen this migration into more affordable areas. And so if we allow this flexibility, you could see people embracing tiny homes, manufactured homes, different types of properties that you can't find in urban centers. And it allows workers the ability to live a great life and a productive life, just not in that urban core that they can't afford.
I mean, I think what Mark said earlier about zoning and issue that Jessica just touched on, I mean, we need to revamp the zoning and requirements around new supply. I mean, we need a more modern regulatory structure to enhance supply options. Then you've got the labor issues that Mark touched on, supply issues. I mean, it's a multifaceted problem, but we need to find ways to right-size the regulatory burdens and bend the cost curve. And one of the ways to do that, quite frankly, is manufactured housing. It's a great option for lower income and first-time home buyers, and anything we can do to facilitate supply of manufactured housing should be part of the solution set.
Yeah, and I would just add to what Jessica and Steve said. I think zoning and density requirements and relief, I think, is critical. We're the largest tiny home producer right now in the country, and we're seeing tremendous demand for ADUs, which are very affordable solutions. I call it the fortress of solitude in your own backyard that can be your home office or your multi-generational living facility where your parents or in-laws can live. I think that's a great solution overall because it's very affordable, very attainable, and very quickly accessible. I also think it's really a combination of regulatory relief, as Steve just mentioned, and some of these other things about innovation. If you look, regulatory relief costs about 24% of a traditional home cost. You add the rework for the labor supply, which is another 10 to 15%. And then you look at things like the cost of traditional home building versus manufactured housing, which is about 20% less. And you add all those things up and you could reduce the cost of housing by about 50%. Now we need some regulatory barrier, things in place, but you can make a significant dent. And I think the reason that's so important is because housing is the largest cost for nearly everyone. And if you can take 20% out of the cost of housing, that means they can double and triple the amount they spend on education, which is, the student debt that Jessica mentioned, or other things. So housing affordability is critical.
Great. Steve, what options are available to moderate income first-time buyers?
Yeah, so there are a lot of affordable programs and products out there and a lot of down payment assistance programs that people are just not aware of. There's some recent statistics. There are over 6 million mortgage-ready borrowers in the largest 31 MSAs. And what's often happening is people are self-selecting out of the market because of misinformation or They think you need perfect credit or 20% down. It's just not true. So how can we as an industry work collaboratively to bridge that information gap, that knowledge gap, and to reach those mortgage-ready borrowers that are out there and help them avail themselves of these subsidies and lower cost programs that are available?
Mark, what are some steps that can be taken by the government to help address these constraints?
I think some of the constraints we mentioned were the density and zoning issues. I think we can incentivize localities to really focus in on reducing their barriers for affordable and attainable housing through either tax incentives or through funding incentives, I think that is proposed currently on the docket. Those are probably the biggest barrier right now today that can get an immediate supply to the market. And I think overall, if we innovate and create more manufactured and off-site construction methodologies, we can really ramp up the supply quickly, because that's the number one issue that I think we're facing today.
And Mark, another barrier to home ownership seems to be local zoning and land ordinances that discriminate against the development of affordable housing, such as manufactured housing. Can you give a few examples of this and why this is so detrimental to affordable home ownership opportunities?
Yeah, I think, it's the whole idea that there's zoning that creates barriers for affordable and attainable housing in certain markets throughout the country, whether it's on an ADU level, whether it's on a multifamily level. And we can create very quickly living structures and homes for people to have good medium income jobs, get a good affordable house that they don't have to rent all the time. And I think it drives down the cost overall for the country. So in essence, I think affordability is really driven, and the zoning is really driven by an incentive structure that rewards or punishes local jurisdictions on inclusionary zoning.
And Mark, one more question for you. Many policymakers have focused on utilizing government grant programs like CDBG and home funds to ensure localities include affordable home ownership in their community development plans. Can you explain the important role you see manufactured housing playing in helping localities address their affordable housing shortages?
Sure, I think it's real simple. The average price per square foot of a manufactured home is half of what a traditional site-built home is. And that's because there's less waste, there's more efficiencies in the process, and it's just an overall better, stronger quality product. So I think we can immediately address and reduce the cost of a house by moving to manufactured housing, because we're half the price per square foot on average. And then in addition, look at things like the regulatory relief, creative financing, creative ideas. It is a multifaceted problem. So it takes everybody working together, but I think manufactured housing is definitely a solution, because it's the most affordable and readily supplied available option today, and it can solve the problem quickly.
On behalf of CQ Roll Call and MHI, thank you to our panel for joining us today.
Thanks for having us.
Thank you for having us.
Thank you for having us.
And thank you to everyone who tuned in, and be sure to follow @Roll Call for part 4 of this event series. Have a great day.